What's up, you guys? Welcome back to the channel. So in today's video, we got a lot to go over, and I'm going to cover why NIO, Xpeng, and LiAuto are continuing to go down today. I'm also going to touch on if this NIO sell-off is going to be done soon. And towards the end of the video, I'm also going to give a few reasons why you may want to remain bullish on NIO, especially considering where NIO is at right now and the prices that we're seeing that we haven't seen for months. And just to show you where NIO is actually at, they're trading below $37, and they're actually down almost 7% on the day. But at their lowest today, they were actually down almost 17%, all the way down to $32. Now this is actually pretty crazy because when we look at the 1-year chart, of course NIO is still up almost 900%, but the last time we saw $32 from NIO was back at the beginning of November. So I'm sure most of you guys are aware that NIO's been pulling back pretty consistently for the past month or so, and on the 1-month chart they're actually down 35%. And they've pulled all the way back from $63, which they saw towards the beginning of February, and now pretty soon it looks like they're going to be about half that price in a single month. But I'm sure you guys are wondering why NIO, Xpeng, and LiAuto are being affected so much and why they're all down. But a lot of these tech stocks and a lot of these EV stocks are being affected by the broad market. There's been a broad market sell-off, and it seems like it's happening quite often now, but it's also not just due to a sell-off in the entire market, because there's also rising concerns about rising interest rates, and also partly because there's an ongoing sell-off from Tesla, and there's actually been a lot of people getting out of their positions of Tesla, and as of 11 this morning, Tesla was actually down 10.1%. And then another thing that could be affecting these stocks is the rate on the benchmark 10-year US Treasury bond, and it's actually been rising, and this is stoking investor concerns about potential interest rate increases. And while the 10-year rate is still quite low by historical standards, it's also hit its highest levels in over a year this week. But as for Tesla, some of the issues actually driving their stock lower are unique just to Tesla. But given where Tesla started even just a year ago and the huge run-up that they've seen in the last year, this has definitely been a key driver of investor interest among a lot of other electric vehicle companies. So it's really not surprising to see them fall off as Tesla has a huge sell-off as well. Because I'm sure you guys know that Tesla really does lead the way, and they kind of are the benchmark for electric vehicle stocks. As Tesla goes up, these smaller EV stocks follow in their footsteps, and the same thing happens when Tesla pulls back. And Tesla was actually up to almost $900. They were up right around $880, I believe. And now they've actually pulled down to below $600. So of course, when Tesla has such a huge move like that, it's going to affect these smaller EV stocks, and it's going to trickle over into all these other tech companies as well. Because oftentimes people who are investing in Tesla, they're also trying to buy smaller stocks that could be the next Tesla. And that's why a lot of people are buying NIO, Xpeng, and LiAuto. They're hoping for these companies to shoot up like Tesla has. And of course, we've seen that happen in 2020, but now as of 2021, and I know for sure NIO hit a new all-time high in January, but all these smaller EV stocks have shot up, and now they're finally starting to pull back down. And it's hard to argue that it's not mostly due to Tesla, because the fundamentals haven't really changed, and China's market for electric vehicles is nearly certain to grow dramatically. And this isn't just talking about the next 20 to 30 years. The market over there is going to grow drastically in the next 5 to 10 years even. And all three of these smaller electric vehicle companies have very competitive vehicles in production. And they're also all posting rising sales, and while all three of them have distance from profitability, their balance sheets are still very strong, and they should be able to weather any kind of downturn in the market. And it's also worth noting that Xpeng is also going to report their fourth quarter and full year 2020 earnings before the market opens on Monday, March 8th. Now we know both LiAuto and NIO have already reported earnings, and NIO really didn't react very positively to their own earnings. And this is due in part to their earnings not being nearly as good as it was predicted. Now their earnings were not terrible by any means, but they just didn't hit forecasted predictions. And so that was also a driving factor pulling NIO down. And they just haven't had a turnaround yet, and they haven't consolidated to where they can grow off of some consolidation. Now this kind of leads into the next topic, and that's whether this pullback is going to be over soon, and whether we can start seeing NIO climb up again like we saw all of 2020. So starting off the year, NIO actually started off very strong, and they continued to clock record monthly deliveries in January, and this was after December was already a record-setting month. And you guys know that most auto manufacturers set record deliveries in December, and that's typically their strongest month. Well, NIO came along and they set record deliveries in December, and then they broke that again in January. Now we know in February they actually had a lower month, and this was due in part to chip shortages, also battery shortages, and just an overall reduction in the potential for vehicles to be delivered in a single month. NIO actually upped their potential deliveries to 10,000 in January, and that got reduced down to 7,500 in February. And then there was also a week in February for the Chinese New Year where vehicle deliveries were pretty much halted and put on pause for about a week. So it makes sense that they only delivered about 5,500 as compared to the 7,200 in January. And since the beginning of February, it's been a pretty bumpy ride for NIO. And I think a lot of NIO investors were pinning their hopes on a stellar fourth quarter report, and they were expecting this was going to lift NIO out of the depressed levels that they've been at. Now, this wasn't really the case. As I explained earlier, they didn't really hit earnings, or at least forecasted what it was going to be. And even despite $1 billion in revenue for the quarter and seeing an expansion in gross margins, it just wasn't quite enough to start pushing NIO back up, and it wasn't enough to begin reversing this downtrend. But I think myself and a lot of analysts are predicting that NIO is going to start recovering pretty soon here, and they're going to continue going up. Now, there might be a consolidation period, and they might trade flat for a couple of weeks or even a couple months. But there's a lot of catalysts ahead in the future, and one of those big catalysts is actually their launch of their ET7. Now, you know that they officially announced it in January at their NIO Day event, but deliveries of the ET7 aren't going to take place until early 2022. And then you combine the fact that they plan to expand to Europe at some point in this year, and I do think that's probably going to happen at some point towards the end of the year, because it's predicted to be in the second quarter of 2021. But these aren't the only catalysts either, because they also have their advanced driver assist system, their battery technology, and their battery swap stations. So I think out of all the smaller EV companies like NIO, Xpeng, and LiAuto, NIO seems to have the best chance and the best odds of reversing this downtrend, and I think it's likely going to happen sooner than you guys are expecting. And NIO has also had an increasing uptake of their battery as a service offering, and they also recently announced autonomous driving as a service, and they've also laid the groundwork for recurrent revenue streams. But for those people who are patient investors and they actually believe in NIO long term, if you're able to ride out these times and actually add more to your portfolio when this stock is down, this could be very rewarding in the future when things start to settle down and we start to see NIO climb back up. Now, I've said it before that you shouldn't be investing in a company you don't believe in long term. If you guys are just buying NIO for short-term gains, this really isn't the stock to be investing in. Because if you're only investing short-term, all these downturns are really going to worry you, and you're probably going to end up selling out at a low price and you're going to lose a lot of money. Where on the other side, if you're actually investing long-term for the next 10 to 20 years in NIO, these dips are times to add to your portfolio. But again, this is only if you believe in NIO. If you've done your research and you really believe in this company long-term, these downtrends are just times to add to your portfolio and really bring down your average share cost. But there's also other reasons to be bullish on NIO, and not only just NIO, but on the entire electric vehicle sector. You guys probably know that China wants to get rid of gas-powered vehicles by 2035. So this means that the party's really just getting started and that EVs are going to have a huge opportunity in the future. And it's estimated that the total EV opportunity is going to be about $5 trillion over the next decade. Now that's a very sizable market, and it's perhaps a lot larger than many investors today are expecting. And you should also consider the fact that globally, relative to a low EV penetration rate, only about 3% globally today have adopted electric vehicles. If you consider that by 2035, there's probably going to be between 30 and 50% electric vehicle adoption around the globe, that's between 10 and 15x of what the EV sector is right now. So if that doesn't give you guys hope for these smaller electric vehicle companies and just the entire electric vehicle sector, I'm not really sure what's going to. And you guys should also know that I'm not a financial advisor, and so I can't give you investing advice. But this goes without saying that for any company you believe in, if you actually believe in them and you've done your research and your homework, and you can justify buying these stocks, there's no reason not to buy stocks and add to your portfolio when they're seeing down and red days. Now, for those of you who made it this far into the video, I want to hear what your guys' average share price is and how many shares you guys own down in the comments. Now, of course, if you guys aren't comfortable sharing that, you don't have to, but I think that would help a lot of other investors who maybe bought in at the top, or for people who have a relatively high share price to see that they're not alone and that there's other people who bought in at the top. Because I think a lot of people get worried when they buy in at the top of a stock and then it just plummets, and maybe they don't believe in the company as much as they thought they would. They figured it would just continue going up when they invested, but then they see a big pullback and they're not sure if they should continue investing. So again, if you guys are comfortable with it, put your average share price and how many shares you own down in the comments. And if you guys want to join the Discord, make sure you guys sign up using the link in the description, or you can also use the top pinned comment down in the comment section. And this is great if you guys are new to investing or you just want to chat with like-minded people about investing. So again, feel free to join if you guys want to. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.